China launched the Belt and Road Initiative with much fanfare in 2013. Chinese President Xi Jinping's pet project, BRI, is the vast collection of development and investment initiatives originally devised to link East Asia and Europe through physical infrastructure. In the decade since its launch, it expanded to Africa, Oceania, and Latin America. While China saw it as an opportunity to increase its economic and military clout, developing nations saw it as an opportunity to benefit from the resulting physical infra-based connectivity with markets, jobs growth through BRI construction projects, among other things. But 10 years since its launch, the BRI has become a road to nowhere for China and a debt trap for other participating countries. Countries which were lured in by the promises of the opportunities BRI would have created are now reeling under massive debt they took on from China to finance the project. A recent report by World Bank, Harvard Kennedy School, Data, and Kiel Institute of the World Economy showed that China advanced a staggering $240 million in bailout loans between 2008 and 2021 to 22 developing nations, including Pakistan, Argentina, and Mongolia. As much as $185 billion was borrowed in just the last 5 years to finance repayments countries are required to make on the borrowings from China. Share of China's loans to countries in debt rocketed by 60% of its overall overseas lending portfolio by 2022 from just 5% 10 years ago. And this suggests that Beijing is fighting hard to keep its BRI partners from defaulting. Some believe China is digging a hole for itself in the process, as most of the countries these loans have been extended to on interest rates as high as 5% seem incapable of paying back in the short to medium term. Developing countries that signed up hoping for an infrastructure-led economic boom are now bogged down by massive debt, all extended to them by China under opaque terms. While China has gained leverage over countries in the process and managed to secure a few strategic ports, mining, and other key locations from nations under its debt like Sri Lanka, Pakistan, among others, the question is how long will the Chinese be able to sustain this? While observations of the recent report are in line with what's been said by several others on Chinese debt trap diplomacy in the past, what's interesting is to notice that China's bets seem to have gone horribly wrong. In what can be called a sign of things to come, Beijing has already begun to change track. According to the report, new lending for ambitious infrastructure projects under the BRI has dropped sharply. Experts believe this is unlikely to change in the short term as Chinese economy is still recovering from the hit it took because of COVID. While what will happen to BRI projects remains to be seen, the turmoil it has caused in countries across the world is only getting worse.